today's session of Visual JForex, in which we are going to get acquainted with the SMMA, the smooth moving average. It is a modification of the moving average, which is kind of important if we consider from the perspective of the smoothing of the indicator. Here, this particular indicator is widely used whenever we want to cancel out the noise and focus on the underlying trend. Of course, there is a lag between the price action and the movement of the SMMA, but that's not the particular concern, since we are going to use this indicator with conjunction with other technical tools. So here basically we try to rely on this SMMA for the trend determination purpose, and to that extent it's fairly useful, and you can say it's efficient as well. You can make it out from this short description. This is an average which is drawn on the basis of exponential moving average, only that the longer time period is applied here, and the smooth moving average gives the recent price an equal weightage to the historic one. That is one crucial difference between the SMMA and the EMA. We will not go into the details of the calculation. I think you can get the formula for that from simple search on the internet. Here we are basically focused on its description and then its functionality on the Visual JForex platform as well as on the JForex charts. So we will see that here from main description. I will briefly read this out. The calculation does not refer to a fixed period, but it takes all the available data series into account. That means that suppose if we are looking at the calculation of SMMA for last 10 periods, then it will take all individual values into account while doing the calculation for the time period which we are referring to, and to achieve that it will be subtracting the previous moving average from the current price, and then it will add this result to the previous moving average result, and it will result in the current SMMA. So now let us go back to the Visual JForex platform developed by the Dukascopy Bank SA here for the purpose of automating our trading algorithm, so that we don't have to sit in front of the screen all day long. Instead of that, we can delegate our task to the algorithm, which we can build successfully on this platform while employing various tools and indicators. So here comes this indicator block for SMMA. We can use any or all of these start points. So all you have to do is get this flow going. For that, simply join these start points to the block. It can be directly done, as well as if you want to put in some other conditions prior to this indicator, or if you want to use another indicator before that, then also you can do that. All you have to do is then join that block to this block, and it will work fine. Now here also, suppose if you feel some confusion anytime, you can get this brief description from clicking on this info block, and you can go through that. Now let us also add this tool on the charts, so that we are able to understand what the SMMA is all about. All you have to do is go this to the chart and type SMMA in this indicator quick search, and then you have it. And as you can see, even though it is only being calculated for last 14 candle periods, still it is fairly smooth if we were to compare this to the SMA or EMA, and that's the reason this is more reliable when it comes to determination of the trend, as it smooths out the fluctuation, the volatility in the underlying instrument's price action, and gives us a broad-based idea of what is the underlying trend, what is the momentum, on which side the momentum is, if it's bearish or bullish. To make it more visible, I will simply edit it and increase its thickness. Alright, width we make it to 2. Now, coming to the SMMA's utility, here there are multiple ways in which we can employ this indicator on our algorithmic setup. We can do simple comparison between the outputs of various SMMA block. For that, all we will need to do is take couple of blocks, SMMA indicator blocks on this board, and then do the comparison between the output values here. As you can see, output value for this particular indicator block is SMMA 14. If we add another one, then you will have another output, and then you can do comparison. So in this way you can add multiple indicator blocks which will be calculated as per their customization, and then you can do the comparison. But I would suggest that whenever you are doing the comparison, to do a comparison like apple to apple or bananas to bananas, you try to simply keep the look back period different, and other input parameters should be of equal scale. Or you can even do like crossover structure. You can employ different or multiple SMMA, and one is of smaller time period, one is of longer time period, and then you can do the crossover, like cross from below to above can be considered bullish, and a cross from above to on the lower side can be considered bearish. So you can employ that strategy as well, or you can simply rely on the comparison between the last hour's closing price and on which side that closing is happening. If something is closing, if the last candle period is last candle's close is below this SMMA, that also means that it is entering into, or it is in a bearish phase. Or if the last hour's candle close is above this, then it can be inferred that the price action is showing some bullish signs, and it is likely to continue in that trajectory. And also, to again kind of cancel out the fluctuation, you can employ multiple tactics here. And along with the price actions side, you can also do the comparison if the SMMA values are falling or on the rise. And as I said, you can do that simply by comparing two different SMMA values in different time zone. So you pick up the SMMS values, like one can be of last hour and one can be of say 5 or 10 hours back, and then you can do the comparison between those two output values, and you will get whether the underlying instrument's price action is on the downside or on the upside, and what is the momentum is in that instrument. And that you can figure it out, that you can use to determine the trend of the underlying instrument. So all you have to do is define various parameters, all these input parameters, and then you will get the output parameter. Suppose if you want to design the algorithm on the Euro USD, then all you have to do is do nothing, as Euro USD is the default instrument for this Visual JForex platform. But if you want to use a different instrument, then you have to change this. So in today's session, let us use USD Jpy, another very widely traded currency instrument. So we add that USD Jpy. Now we have to find this. Sometimes it happens that we find it very difficult to figure out where that particular instrument is. So you have to scroll from top to bottom or from bottom to top, and still it is not visible, but let's continue. We should, okay, so we got the USD JPY here, and we will use this as our default instrument. Now coming to the time period, so here it can be of 10 minutes, starting from 10 seconds to 1 month. You can utilize any time horizon for your calculation of the underlying instrument: hourly, 4 hourly, daily, weekly, monthly. All these input parameters are there. For convenience, I stick with hourly, but you don't necessarily need to keep the default time period at hourly. You can do the changes, and only thing it will do is it will give you different time periods underlying momentum, how the instrument is behaving for that particular time horizon, and you can use that to trade. Longer the time period of the underlying instrument, the candle, the longer will be the time horizon and the underlying instrument's trend validity. Now coming to this another input parameter, shift. Shift is, as I said, that shift is used for defining the look back period. 0 is for current value. If we want to go back in time, say we want to take a look on the output value 3 hours back, then we have to take shift 3. Time period. Time period is the SMMA's calculation period. So here it is being calculated on 14. This is the default value, and you want the indicator to be edited to 50. You will have different output parameters. So here it looks more smoother than what we were seeing when we were employing the 14 hours SMMA. Longer is the time period for calculation, smoother the curve will be, and as you can see from this, the SMMA gives a pretty good idea whether the underlying instrument is in the bullish phase or in the bearish phase. But as you can see from the price as well, there is a lag, and it doesn't quickly changes its direction. It takes time, and sometimes that can be problematic. But then, as I said earlier as well, we have to use this indicator in conjunction with other tools as well to kind of give you a head start. This indicator is not futuristic. It's not going to look into the future. It is based on the historical price action, and it takes a fair amount of time to change its trajectory from one way to another. So we have to kind of use this indicator while being fully aware of that, and that's the only way we can take full advantage of this indicator. So here you will make changes to this, or if you don't want, you don't have to. Any time period on which you want the SMMA to be calculated, you have to type in that value here, then you get the output value. Now coming to the settings, as you might be aware, the bid and the ask carries spread, and because of that, on which side the calculation is being done also make a bit of difference. Then coming to the applied price, on which price of that candlestick the calculation for SMMA is done, is also going to influence. And here, for example, I will illustrate to you. We do the edit, and we okay, so here this is a SMMA 50 is being calculated on the close price. If we use high price, then you will see the output shifting to the high side. Okay, see here we saw this SMMA output shifting on the higher side. If we now use that low price, again here almost 10 pips difference has come between the high price and the low price. Similarly, you can use all other options. Whichever suits your purpose should be taken into consideration, and on that basis the calculation for SMMA will yield different prices and different outputs. And as I said, we have multiple ways in which the SMMA can be used in forms of crossover, in terms of doing comparison analysis, in terms of the analysis of candle action, the price action, whether it is above or whether it is below the SMMA. So in multiple ways the SMMAs can be employed on our quest to build algorithm which is going to be profitable, and we can do that quite easily, not exactly easily, but with due effort and time you will be able to develop and algorithm which will be reliable, and then you can keep it running on the bank's platform, the JForex trading platform. So here I have like couple of experimental algorithms running, and these will work day and night, so you don't really need to be bothered day in day out. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. We will be back again tomorrow with a new indicator. Till then, do experiment with this SMMA indicator and see what can you build with this. Till then, have a fabulous time. See you tomorrow. Goodbye.